Action. We have Ryan Dietrich. He is Schaefer's Investment Research Senior Technical Strategist. His last recommendation, by the way, is up 31% since he told you to buy. He's got 4 new plays for you. And Larry Shover is in the pits of the CME. Good to see you both, gentlemen. Larry, let's start with you. I just want to know where folks are parking their money right now. They're obviously taking out of stocks big time today. Where are they putting that money? They're just holding on to cash?
I think people are holding on to cash, David, and let's be serious. Right now, we're in a low liquidity, low attendance environment, as it were, right now in the S&P 500, in the stock market. That's causing people to draw everything out of their wardrobe, whether it be emerging market problems, whether it be the deficit, whether it be tapering. Obviously, Syria is the culprit of today's action, but it just intensifies the fact. Right now, desk flows are very, very quiet. It seems to be more of a buyer strike than massive selling, at least what we saw today.
You know, Ryan, you believe that the markets are looking for a bottom, pushing towards that bottom. At the same time, Syria seems to be the cause. Now, if we have more of an escalation of events in Syria, does the market continue to trend lower? Or do you think that this is more of a normal bottom for the market to find? And the reason that traders are using is the issue of Syria.
That's a great question. You know, if the Syria stuff obviously spirals out of control, of course, that's going to hit the market. But, you know, what we continue to be impressed with in the market is, you know, we pulled back about 5% on the Dow here, less than that on the S&P. If you look at a lot of the fear indexes and ways you measure sentiment, we have seen a huge spike in fear. You know, the VIX is up around 17. Previous spikes up around 20 have kind of marked our short-term bottom. But at Schaefer's, what we've liked is some of these sentiment polls that came out just last week. A lot of moves in fear. You know, investors' intelligence real quickly moved above 35% on people looking for a correction. What's that mean? Well, since 1980, it's only happened 28 times. A month later, S&P up about 2% on average, up 75% of the time. So again, you know, the AAII bears up 6 straight times. Never happened before. So yeah, a lot of fears coming in, and hey, scary headlines. But we have seen this before, and this is how bottoms have formed this year. And we think once we get some good news, we could have a surprise September rally potentially.
Okay, so bottom line, when everybody's panicking, you're happy because that spells opportunity for you, and you do see it for. It's interesting, by the way, that while everybody else is running for the hills, you have upped your year-end S&P figure to 1750. That is a very bullish call for a moment right like this where everybody's selling.
Well, that's right. You know, we came into this year with 1650, which is about a 15% target, and I can tell you that was one of the more bullish out there.
Sure.
And, and again, when you look at this market, you know, September, you know, let's look at September for a second. You know, when you're up 10% for the year heading into the dreaded month of September, it's only happened 5 times last 20 years. September's been higher 4 of those times, up about 3% on average. The last 10 years, September's up 7 times, and again, positive on average. So to me, I see a lot of similarities with what happened when we came into the sell in May, go away period, where May's actually been positive since 1980. A lot of fear coming in, which is good. Maybe a little more weakness into the end of this week and into September. Really get that spike in the VIX, put the call ratio spike, and that's how you can have a good bottom, in my opinion.
Okay, well, Larry, let's talk about September 18th to be exact. That's when we're going to get news from the Fed. We believe that we're going to see tapering begin on that day. Is that the biggest market-moving day of September, in your opinion?
It's hard to say because I think right now people are becoming a lot more comfortable with what the Fed's not going to do. Right now people are saying, well, maybe it's going to be less than $10 billion per month than something bigger than that. And it seems like, again,
be bigger than that, don't you think, Larry? That's a small number. That's what they're saying.
Shaving it from 85 down to 75 is not that big of a number. Exactly. I think people are a lot more concerned with the succession as opposed to the tapering. It seems like the market, at least the equity market, has become very comfortable with a little bit of tapering, knowing that they're tapering for the right reasons, and interest rate volatility is starting to temper just a little bit.
Well, and Larry, one question is, what are they tapering? They basically hold 2 commodities right now. They hold treasuries and they hold mortgage-backed securities. You say you saw something in the last Fed notes that indicated that they may hold on to their mortgage-backed securities until the end. They sell off a little bit of their treasuries, but not the MBSs, right?
Exactly. I think it's going to be a vast majority of treasuries as opposed to mortgage-backed securities.
Now, let me stop you right there, Larry. What does that mean to the investor, knowing that the Fed is really interested in forming a security around this housing reboom? How does that affect the investor? What should they think they should be investing? Does that mean REITs are going to be a good investment right now?
Well, perhaps not. I think what's even a better investment right now is still the housing, the home builder sector, financials, and even materials. I mean, we're in the infancy of a housing boom, I should say. It's not going to be like we saw years ago, but we're in the very, very infant stages of a 5-year flight of steps that we fell down, and we're just starting to climb out of that. So long-term, housing, financials, materials are going to win the day.
Interesting. Okay, Ryan, last question to you really quick. We didn't bring it up. The Russell. Russell had a really rough day, and David made a good point here. The worst performing group when it looked at all the major averages. But you like small caps. Do you like a day like today? You looking for deals?
Yeah, we do think it's an opportunity. You look at the Russell, it broke above that psychological 1,000 level in July, and then we had that really nice July rally. Now we're pulling back right to about that area. So to me, as long as the Russell stays above the 1,000 area, that's a good sign. If we break beneath it, then hey, sure, that could be more of a correction that's coming. But looking at small cap names, those are the names that have a lot of bearish puts coming in, significant short interest. What does that mean? Yeah, they're up a lot. We keep hearing how extended small caps are, but that's potential buying pressures. New, better news can come in, price goes up, that can push it higher.
By the way, something else he's buying, Zions Bancorp,
Yeah.
and that is down 4% today. I bet you're buying that, Ryan, right?
No, exactly. We like that. It's another one of those banks that look good. A lot of short interest on it, bearish bets on it. Again, we're not super bearish on the market here. We think this correction is, close to bottoming, and financials are still an area that, like Larry just said, they're well off their highs, but a lot of room to go still.
Zions Bancorp is down 4.4% today. So if you want to buy in a dip, this is it. Thank you, Ryan Dietrich. Good to see you, Larry. We're going to see you in a couple of minutes when the S&P futures close.
Coming up next,
The S&P futures are just about closing. Going back to the CME with not only Larry Shover, but look who's here. There's Sandra Smith on the left. Good to see you, Sandy. So what are the markets telling you about tomorrow? Are people going to be buying into this dip?
Yeah, definitely. We're seeing investors in general pouring into the long side of the commodities market, with oil prices spiking to multi-month highs today, 18-month highs. Gold prices spiking, so there's that safe haven play that's going on here. But everybody's really focused on the oil market and the impact of this Syria story on it. David, everybody says, why should I care? Syria is not a major oil producer. Well, the concern is that if there is indeed a U.S. strike in Syria, that it would affect the surrounding countries. So these markets here in Chicago are very focused on all the happenings on Syria and what the U.S. is going to end up doing. Word is that something's going to happen by Thursday. In the meantime, this market is bid, and the investors are pouring into the long side there.
It's a really good point, Sandra. And, Larry, again, something else we're not really focusing on yet is Europe. And there's really some problems in Europe. In particular, we're going to be getting some statements from the ECB. A big meeting is coming up. Your eyes are on Italy right now.
Absolutely. All eyes are on Italy right now, and that could really throw a monkey wrench into things. As we know, they're growing their way out of a recession, something that's taken so long, and they're not even into baby steps yet. And anything when it comes to the elections or with Italy, that could just derail everything that people are just pinning their hopes on. And we've seen some rotations out of Europe today just for that fact alone. But long term, it seems like things are on the up and up with Europe outside of Italy right now.
Sandy, bottom line, when you talk to traders down there, when they look at the overall equities market here, do they think that we're forming a bottom from which we can grow again, or is this a bottomless pit we're falling into?
Well, you're not seeing a mass exodus that many might think if we were to actually see the Fed pull out of their stimulus program come the fall. So there's a large expectation on this trading floor that we're not going to see the Fed pull out of this program altogether, that they're going to ease off of it but not get out entirely. And as you can see, we're not seeing a massive sell-off here. We are seeing some selling, but we're not seeing an exit from the equities markets, that's for sure.
And the price of gold,
a little bit more volatility as well.
Today is telling you that they just don't believe that the Fed is really serious about tapering, I mean, that price of gold would not have popped the way it did if they believed it.
Larry said 10 billion. I'm like, 10 billion? That's like, McDonald's money. Come on, 20 billion.
Exactly.
The Fed is losing a little credibility, though. That's very dangerous long term. Sandy Smith, Larry Shover, good to see you both, gang. Thanks very much.
Thank you.